I spoke to a trader this morning who claims to have over 65% win rate, but he's still not profitable. So why is that, guys? Why more and more traders using high win rate systems and low risk reward ratio systems are not able to make it? This means if you're trading on a 60 or 70% win rate and aiming to 1-to-1 or 1-to-2 risk reward ratio, then you probably are not going to be able to make it over the long term. So why is that? Unfortunately, every video out there is promoting those systems and this approach of trading. And it is not about the day trading system. It is not about the way you are using, for instance, indicators or moving averages or candlesticks or market profile, all of that. What makes a major difference and separates winning from losing traders is the ability to stick to your winners. And countless other traders before me have said it, traders that have been incredibly successful, and everyone is saying the same thing. Cut your losers short and let your winners run. Have you ever thought why is that, guys? One of the major reasons this is true is because by cutting your losers quickly and letting your winners run indefinitely, you're giving them a chance to breathe. You're giving the winners a chance to breathe, which means that if you're in a profitable trade, you really want to maximize that trade. And there is no way you can know this in advance or before you're taking a trade. The only way you can know that is by testing the market. And since I've been doing this for many years, I can assure that there is no way you can predict the markets. The only way you can actually find a way around it and find a way how to be profitable is if you are inside of a trade, you give this trade enough room to breathe, but you have some sort of a mechanism or protecting mechanism that will help you to eliminate the bad trades very quickly and let the winning trades run for as long as possible. And how is this going to work out in real time, guys? So there are many ways, and unfortunately most of those ways, they don't really work unless you have predefined framework, a way of taking trades, letting trades run and almost not risking anything. I know it sounds incredible and lots of you will think that I'm either insane or I'm talking nonsense. The reality is that once you're in a trade, you would need to feel the market, see which way the market is going, have a way to book profits very quickly in a very systematic approach, and then let the other part of the position run. By doing this, you're enabling, as we call it, a risk-free mode, or a way of not risking anything past the point of entering in a risk-free trade, and then from there, let the trade unfold in front of your eyes, preferably not even following this trade. But what I mean by that is that once you're in a trade that you're not risking anything anymore, then you're a lot more objective to see the reality. Once you're in such a trade, there is no need for you to make any more decisions, because the reality is that the more decisions you make, the more variables you're adding to the equation. And the more variables you're adding to an equation, the harder and more complex this equation becomes. Have you ever thought about why the most beautiful, smart equations, they're the shortest? So we have 3 to 4 letters that are inside of this equation. It is the same thing with trading. So the more you're trying to overcomplicate certain things, the harder it is for this thing to work. And the more factors you're adding to a trading system, the harder it is for this system to become a working trading system. That's why what you should be doing is to dehumanize your way of trading, take out as much as possible and let the market decide if you're right or wrong. Then and only then you will be able to get one step further and one step closer to profitability. And once you get closer to profitability, you're also getting closer to consistency. Once you're getting closer to consistency, you are 90% there, guys. So in other words, you really want to have 3 to 6 months of consistent trading results before you can claim that you are profitable. Because it's one thing to be profitable and a completely different thing to be consistently profitable. So what do you mean by managing your risk well? If you take two traders using the same trading approach, they will tell you two different things. But the good thing about our double digits day trading system is that it is actually quite equivocal. And if you take 10 different traders, we have very systematic rules, so they would point at the same direction, which is very rare for trading systems. So let's take two examples, guys. What usually day trading systems are looking to achieve, and they claim that they can achieve it with very high accuracy and high win rate, is let's take this as an example. If this is your entry and this is your stop loss, traders are usually looking to book 1 or 2 x's in return. So in other words, this will be a 1-to-1 or 1-to-2 risk to reward ratio. And it is perfectly fine if, let's say, we are living in a perfect world, nothing is changing, our emotions are always staying the same. And as I'm sure that you know, and you've experienced it already, that there is no way you can react in exactly the same way every single time the market opens, every single time you're about to place a trade. There is always the hesitation, the palpitations, inability to stay in very controlled environments when things are getting out of control, so to speak. So it looks great when you're making a video and so you're trying to share a system. I was watching yesterday a trader talking about the market open, that if this is your 5 minute candle and this is your low, this is your high, you're buying when the price breaks the structure and retests this level, or you're actually selling when the price retests this level. And for a moment I thought about it, okay, that sounds like a good way to have a systematic approach. But in reality, when you start browsing that and looking for those patterns, the thing is quite different. So if you're aiming for 1-to-2 risk to reward ratio, this is what this trader was showing out there, it means that this will be your stop loss and this will be your targets. This sounds great, but even if this is a high win rate system, the reality is that the moments that you're gonna lose, you also most likely will lose your temper. So you would start over trading, and this is when the dangerous point begins. With our system, things stay in a completely different way. If, let's say, this is our entry and this is our stop loss, let's say this is 1-to-1 risk to reward ratio. So we have high probability entries and our stop losses are very tight. So it's very easy for the price to go to the first target. And the first target is always at 1-to-1 risk to reward ratio. So when the price reaches there, in over 85% of the cases, we're booking profits. So even if the price reverses and hits the stop loss, we basically won't lose anything because we've already booked profits very quickly. And we don't really wait for the price to go to 1-to-2 because it might never get there. What it does, on the other hand, is basically two things. The first thing I think is quite obvious, that if the price reverts and hits us and stops us out, we won't lose anything. So psychologically, we're in a better state than those guys here. But what is the major thing, and something that nobody talks about, is the fact that if this trade turns out to be a very profitable trade, which happens quite often, or in our case, between 5 to 10 times a month, we're able to get into double-digit returning trades, or these are trades that are over 10x's or 1-to-10 risk to reward ratio. We've just closed an 11x trade today and 28x trade. Basically, I'm making this video at the same time I made the other video from last time, so you can actually watch this video below. But I'm getting off track here. What I want to say is that there is no way you can predict this in advance. What you can do is a couple of things. First, you can protect your downsides. And the second thing you can do is leave the upside uncapped. This is how, if you have a working system that is proven in time that it works, you're able to make a lot more money than potentially lose. And this is the only way, if you have a working system, that you can actually capitalize on asymmetric trading opportunities. If you think that a system that has a very high win rate will make a lot more money because you're 9 out of 10 times right, you should try this. And I can guarantee you the result won't be great. Most of the traders that are joining the day trading program, they are and have been trading on this type of systems. In other words, high win rate, low risk to reward ratio systems. Once they start seeing the edge that we are getting with the double digit day trading system, they do realize that the reality is quite different from what everyone else out there is trying to teach you and show you, convince you. A high probability system is the only thing that you need. In fact, a high probability system is actually a low probability system because there is no way we can control our emotions. And this is one of the biggest drawdowns a high probability system has. And even if you put systems in place, you can give it a try, of course, but from my over 10 years exposure to working with traders, I haven't seen a single trader who was able to control their emotions. And don't forget that day trading is one thing and swing trading is a completely different thing. So when you're day trading, what we're doing, you have a very limited amount of time at your fingertips, and then during this time, in our case this is only 15 minutes at the market open, you're to make one or two very important trading decisions. And one more thing, guys, while I was running today, one thing came to my mind and I was thinking about it. I know this is probably quite far-fetched, but think of it this way: it's very hard to start running. If somebody tells you and gives you a challenge, can you run for the next 30 days, you would probably not take it, or you might actually quit on day 2 or 3. This happens with the majority of people. And I was thinking it from a different perspective. Instead of taking a challenge and thinking of from this perspective of the 30 day in front of you, you should just start running. Imagine you start running today, you start running tomorrow, the day after tomorrow, so this will be 3 days, and then on the 4th day the whole exercise becomes a lot easier. In other words, it is easier to start doing something, and then from this point of view, while you are already inside of this cycle, to put yourself the goals. And it is the same thing with trading. So a lot of traders are asking me, how are you reaching 20, 30, 40 X's? And those traders, they have no idea of what our day trading system is about. And it is the exact same thing. It is very hard to say when you're taking a trade, this trade is going to be 20, 30 X's, since there is no way you can predict the future. But once you're in the trade, once you start getting data out of this trade, once you see how the trade reacts to certain levels, to certain parameters that you're following, then your trade becomes more valuable. And if you have an objective system of how to separate the good from the bad signs, then at these points, you will be able to make a better decision, because you're taking and making a more better informed decision, as opposed to deciding 1 or 2 hours in advance that you want to take a long trade, and this trade is going to give you 20 X's because the next major level that you're targeting is 20 X's away from your entry point. Having said that, there is no way you can predict that. Markets are evolving, markets are changing every single day. The only thing we can do is manage our risk. And if you manage your risk well, you're 2 steps ahead of everyone else.